Well, hello and welcome back to 5 Pillars of Business Success for Startups. If you don't know by now, I'm Brett Hirsch. I'm your instructor for the course, and this is really the alpha test for our boot camp. So if you're watching this, please provide any feedback you can at the end of the video. We really appreciate it. And remember, our goal is really to help your business, your clients, and or your students create successful businesses. So thank you so much for participating. We really appreciate it. Okay, in this video, this is an introduction to Pillar 3. This is the first lesson of Pillar 3. It's an introduction. As you can see, there's make a profit. That's the pillar, make a profit. And you see, make a pillar is one of the 5 pillars holding up business success. Of course, we're really showing you make a profit. The other 4 there, invisible, but they're all holding up business success. Okay, so what's the purpose of Pillar 3? Again, it's make a profit, but our goal in this is not to make you an accountant. That's really not our goal here. Accountants play a very, very important role. We don't want to make you one. You need to go to school for that. But what we want you to do, however, is to develop a very good understanding of what it means to generate a profit for your business. Not anyone else's business, your business. That's our goal. And in doing that and achieving that goal, we are going to help you learn how to calculate some break-evens. We're going to use a couple different break-even analysis. I promise we're only going to have, I believe, we only have 3 formulas you need to memorize. Not the right word. Not memorize, learn how to use to help you grow your business. So we're going to provide those formulas for you. You can print them out. You don't have to memorize them. There's not going to be a test, let's say. Okay, and we also want you to do these 3 formulas we're going to teach you are related to the break-even, profit break-even, unit and price, and then also we have one called a P&T calculation formula. Now, they're all going to work together to help you determine what we call your business imperative. And at the end of this course, you're going to be able to answer the question, to be profitable, my business must sell X number of units at X price. You're going to learn how many units units of your product or service, how many billable hours, whatever you're selling, how many of those items you have to sell in order to generate a profit at the price that you're charging for those units. Okay, I'm sorry, I'm getting a little tongue-tied here. All right, so let's start off here with what is profit. This might seem obvious. I mean, all businesses need profit. But what is profit? It's not lacking profit, we know that. If you don't have a profit, it's the #1 cause of business not existing anymore. It's the #1 cause of failure is not having enough money coming in to pay either your bills or the business bills. That's the #1 cause of failure. Ultimately, all business failures are really caused, unless something happens to the owner or something, some catastrophe happens, caused by lacking profit. But what is profit? It's very confusing because there's so many different terms for profit, and we're going to go over a few of those right now, and all of them mean very different things to different people. Let's go over a few real quick types of profit. You got your bookkeeping profit, you got an accounting profit, and then you got a taxable profit. But let's go over each one of these individually. Let's see what's the problem with each one of these. Okay, bookkeeping profit. Bookkeeping profit is really based, for most of us, for most small business owners, fortunately or unfortunately, it's based on you and your software. It's based on you trying to track items on your own, or possibly you have hired a bookkeeper. However, if you remember in a customer experience, you don't know if you have a really good bookkeeper or not because you're not an accountant. You don't know if they are trained in accountancy, and you don't know if the numbers you're getting are really, really good numbers that you can use to make effective management decisions with regard to your business. The results for bookkeeping is really based on bookkeeper talent. You might have a QuickBooks program that you're deciding to use for your business. I'm very sorry. QuickBooks does not make you an accountant. Ask some accountants what they do with their clients who use QuickBooks on their own, and you're going to find a lot of them really aren't real happy with the output that they get from their clients, particularly during tax season. I can attest to that. Okay, so the results based on bookkeeper client, and usually, unfortunately, your reports that you print out, because you're not an accountant, those numbers are usually incorrect, and they are, for many of you, they're going to be worthless as far as making effective financial decisions. That's just some of the problems with bookkeeping profit. Now let's go to accounting profit. Next layer, that's going to be accounting profit. Now that's a lot more detailed. A lot of times that'll use what we call generally accepted accounting principles, which is really GAAP, which is really different from accounting profit in some ways. It's one form of accounting profit. But in order to understand accounting profit, to calculate accounting profit, and to see how a business is doing, the financial reality facing a business, you need to be able to interpret and apply 3 different statements. You need to be able to understand the income statement, the cash flow statement, and the balance sheet. You got to blend all those together in order to get a really good picture of the financial health of a business. And most of us just can't do that. Now we have taxable profit. Completely different form of profit. But what is taxable profit? That's really just the income that you pay taxes on. It's based on laws passed by Congress and Treasury regulations, which really have very, very little to do with the health of your business. You can't look at a tax return, I'm telling you, I've been doing this for many years, and really tell what the financial health of a business is, because taxable income, taxable profits calculated based on a series of rules that have really nothing to do with tracking how your business is doing. So all of these forms of profit, quote unquote, bookkeeping, accounting, and even taxable profit, none of them really consider what's really important to a small business, and especially a small business startup. And what is that? What is important? It is cash, cash, cash. Everything is cash. You got to have enough cash coming in to pay your bills. You got to have enough cash coming in to pay your business bills. Nothing else really matters in business, particularly a small business starting out. You need cash. Cash coming in, cash going out. You want to have cash left over. So that is why we coined the phrase, I believe we coined the phrase, entrepreneurial profit. And this is really a blend, if you're an accountant, what we're really doing in entrepreneurial profit, and I've been doing it for years with different clients I've worked with, is we create financial statements that really blend cash basis accounting, income and expenses with the cash flow statement. So if you're an accountant, that should make sense to you, but the basic principle is that to be successful, and remember this in the definition of business success, organization makes current customers happy, can get new customers while generating a profit, and that is generating more cash than it spends after paying you, the owner. So that's the principle. To be successful, a business must generate more cash than it spends after paying the owner's bills. That's what we're after, is an entrepreneurial profit. An entrepreneurial profit starts with your bills, and that's really what we'll go into really deeply in the next lesson on Pillar 3, Make a Profit.